Moving on to the next lesson, technical analysis indicators, moving average and oscillators. So we're going to add these to our charts and start understanding how they move. And I'll show you guys the free one we offer that we like to use and identify higher time frame trends in the market on lower time frames. I know that might be a lot if you're a beginner trader. That's okay. We're going to walk you through it. So moving averages and oscillators are two common technical analysis indicators used by traders to help identify trends and potential entry and exit points for trades. Again, we don't use them for entry and exits. We have a different system for that. We use these as kind of alerts, get ready, watch price, can our setup form around these areas, and I believe that's how you should use them. Moving averages are smooth out price movement, so they don't predict anything. It's taking the data from the previous X days candles that you tell it to do, and it draws a line that's more smoothed out so you can kind of understand the flow of price and not get caught up in the up and downs, right? So oscillators help doing overbought and oversold conditions, and again, do not trade them as is. They are areas to alert you to get ready and trade your system. We'll break into these on the charts in a second, but the most common ones are the RSI and the MACD. And just a little disclaimer again, it's important to note no indicator is foolproof. It should not be relied on solely for trading decisions. Indicators should be used with other forms of analysis, such as price action, support and resistance, to take informed trading decisions. So again, you're building a trading system, not a trading buy-sell system. Alert, sorry. There's no one indicator to do that for you, and if it is just one indicator, there's a lot of behind-the-scenes coding from different types of indicators that go into that one indicator, which TradingView has a bunch of, but I recommend you start understanding the markets rather than just waiting for indicators to tell you the markets. So let's get into the charts and look at these. So let's add in the most basic one that almost everyone should understand, and that is moving averages. Oops, spelled that way wrong. I like the smooth moving average, the basic one. And if you click that up here, if you don't see it, it's this little arrow. S, smooth moving moving average. I don't know. Is that what that means? Smooth moving average. Anyways, inputs. So chart, you could change it. You want the input from, we're on the daily, so maybe we want the weekly. Now it's going to pull it from the weekly. If you want it from just the chart, whatever you move the chart to, it's going to readjust to that. And then the length is how many days it's going back. So as we crank more days up, it becomes more smoother because it's taking more data into the line. So if we go up, 50 is a good one a lot of people use, and it'll kind of get you the movement of the market. So in choppy conditions, you could see it kind of whips back and forth. It's kind of hard to use, but once we broke through, price likes to touch it. That's showing strength. We're going down. But let's say use this line as an immediate trade entry. So you're like, okay, I'm buying as soon. Let me turn the magnet off. I'm buying as soon as it breaks through. I'm putting my stop loss up here. And we're going to run it till price broke it. So down to here. On paper, that looks amazing, right? You're like, wow, that's huge. That's a 8.84 reward to your risk. Well, let's say you did that right here. And you're like, okay, as soon as it crosses, we're out. Well, you had all this profit, and now you're back here. Still in the profits, but that's what a system is going to help you identify. Don't rely on just this one thing. You want a full system to get you in and out of trades. Again, once we get into the advanced section, we'll get more deep into this, but I just want to go surface level and explain everything so you could build a proper foundation for trading. Let's take off this, or we'll leave it on so we could kind of start getting our feet wet with moving multiple indicators. Let's add in the RSI and MACD. Start with the RSI, the Relative Strength Index. And this one could kind of help you a little more, right? So let's stick to our last setup. Stop loss above this swing. As soon as it breaks through, we're entering a trade. Now, how could we get to the bottom of this and try to capture that? Well, if we use this together, you can see right here, price reversed. It broke through. Maybe we're using once it crosses over the yellow right there. Now, let's line it up right there. Boom. Just by using those two together, we went from getting stopped out way up here and a little bit of profits to almost timing the market perfectly at the bottom. So basically how the RSI works is when it's up here, price is tending to reverse because of too many people are buying, price needs to readjust itself. And when it comes down to here, it's oversold and price needs to readjust itself and go back up. So if you used it alone as an indicator, let's forget this moving average. Let's trade just this. So it broke above here and we sold right there. So if we sold this top, where is our stop loss? There's no system really to get in on a stop loss. So we'd have to use a static stop loss. So maybe we use a real small one. And then we waited for it to get to the bottom. Well, we're stopped out. If we do it again, we got to the top, we sell here. Where's our stop loss? We would have to guess. Maybe we use whatever, right? We use a big one. Risk to reward might not be too good, so stopped out again. On the last one, it came up one more time. Let's put a buy right here, or a sell right there, right on the market. Now what? We'd have no data. Static stop loss, whatever we feel comfortable with. This one did not get stopped out, but when we get to the bottom right here, it's a decent move. You made money, but you missed the main move. Like this was just kind of dropped consolidation. It dropped more. You could have doubled 3 times your win if you did not trade just this and it broke through. So you would still be in the trade until up here maybe. But by the time you got here, you're like, oh, it's almost time for sales, right? You got to use them together and get confluence between them both. You would have got out somewhere right around that area out of 4. So even better than just using this by itself. So let's add in one more. I don't recommend adding all these at once. I'm just giving you examples of how you want to use multiple together. So moving average, convergence, divergence, that is the MACD. Now let's get some trade setups all together. Let me just put this back where it was. Okay. So let's do the same setup, same areas, okay? So came here, we're in a buy, but on here it didn't give us a buy signal. This is a buy here, but a sell here. Right here would be kind of our next trading system setup. Stayed above here. We'll go the next one over. Stayed below here. We're on the high end above the 50 on the RSI. And right here, the MACD crossed over going to the sell side. So really our entry, let's say, would be right here. Where would our stop loss be? Maybe somewhere above here. Now, how do we get out of this trade using all these indicators? Well, we would want it to cross over this blue one, right? We want oversold to be towards the bottom, and we want this crossover to be going back up to the upside. So right around here would be a point to get out. Somewhere right there, right? So 3.39, not a bad trade. But let's say this is your main rule. You want to ride this all the way down. Well, you're going to hold it till we cross over. And that's way down here, putting you in a really big trade while getting your setup all confluenced with these and letting your main trend of the market get you on the out. So let's say we're coming here and we crossed. We wanted to make sure it wasn't a fake out. Well, what's happening when it got here? It is on the overbought side, right? So maybe that's a signal this is a trap and we're going down. But look at the MACD. The MACD is strong to the upside. So really, on 1, 2, on this third candle, we would have been out right at that blue line because it went through. We wanted to see, came back in. We're like, okay, move the stop loss right above this candle, and we would be out. And look, it protected us from losing all that profit, which would have brought us from a 10 all the way to a 4.76. So this is just getting you started in indicators. I know we went a little deep in this one, but I'm not creating a trading system for you. I am simply just showing you how don't use one alone, use multiple together, and you'll find your system in the long run. But we're going to take these off and we're going to move into trend lines in the next section. And actually, I'll leave these here so we could kind of build on the understanding again of using multiple together.